Welcome to this week's episode of Your Stock Request for the 25th of June. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is the weekly video where I take your requests and analyse the share price charts. So this week we have Kogan, Foodition Group, Emeco, Oricobra and Elixir Energy. So if you have a request, please send it through. Make sure you've signed up to the free newsletter. If you enjoy these videos, we'd love to get a review from you on Facebook or Google. Remember, if you need extra help, please inquire about our portfolio management services. And finally, any advice here is general only. So this is a daily chart of Kogan. Obviously, it's had a cracking run over the last few months. There's nothing really wrong with the way it's trading, and what you've got to do with a stock like this is just stick with the trend. I mean, at any point, it looked like it was quite overbought. And you could have sold out and you would have potentially missed out on much more gain. So look, the trend is very strong. There's no warning signs yet. Probably the best thing to do here would be to run a tight stop loss. I'd consider something like a 10-day moving average. So we could see here, if we put a 10-day moving average, it seems to have respected that extremely well. You just have to be prepared that if it crosses and you sell out, even if the next day it's back above it, you have to, I guess, consider getting back in. Otherwise, you might miss out on much more upside. So this is what I'd use to run against it. If it crosses under here, it'd be time to exit and then wait for another buying opportunity. All right, the next stock, go back to our regular chart and pull up Foodition Group. So this one looks like it's been trading fairly poorly. So we've got this reversal here on the 11th of June. So opened higher, and then closed much lower. And then since then, we can see how it's traded poorly and that it hasn't been able to rally. It's basically stayed in the bottom half of this candle. And then recently, we've had it closing on its lows. So not looking very good. I think the share price would come back. To me, the obvious level of support to look out for would be around $4.50. Emeco. So what we've had is sort of a rally, a consolidation, a breakout earlier in June, but very quickly it went back into the range. So this is the obvious range here. Now this looks like a false break, which is quite dangerous. It means that there's a good chance that by coming back into the range, it may well break support here. So, you've got to keep a very close eye on this $1 support level. I think I think there's a good chance it can break that. So keep an eye on it. If it breaks that, you need to get out pretty quickly because the share price may well tumble. So, unless it can get back above this $1.20 mark, I think it looks negative. So this is Oricobra. So what we had was, you'll notice sort of big rally off the lows in March, sort of consolidated but sort of failed to do much. Then it actually broke to a new low, but only very briefly, and then it launched higher after going to a slightly new low, and that there's your buy signal. When you go to a slightly new low but you rally very strongly off that, that's the buy signal. So it rallied quite nicely after that. Price action sort of early June looking fairly poor. Sort of sharp pullbacks got me a little bit concerned. Hasn't really made much progress. I think this needs to probably just use up a bit more time. So maybe it just needs to come back a bit, make another higher low, L2, and then I think it'd be ready to go. But I think just for the short term, it looks like it might be under pressure. And finally, Elixir Energy. So, I suppose on the positive, we've had this sort of double bottom here that it's rallied off, but at the end of the day, if we zoom out, it's still just in a long-term downtrend. So, I can't get excited about this unless we'll just zoom back in, unless it can take out this February high, it's just in a downtrend. Shorter term, it looks to be under pressure. It's tried to break this previous little peak here. So if we're looking at this sort of mini uptrend, it's tried to go to a new high and rejected. and I guess the next day or two will be crucial. If it can close back up above here, it means it's on its way back up to test that high. Otherwise, we may well see it come back a bit more. Okay, well that's all for this week. If you have a request, send it through. I'll try to include yours next week for you.